Welcome to NAIFA's Advisor Today podcast series, where we focus on how financial advisors work, live, and give to their local communities and our greater financial services industry. Now, let's get started with the show.
Hi, everyone. Welcome to Advisor Today, the podcast, where we give you back the voice of the advisors and what's happening out there in the insurance and financial services world. I'm without my co-host today, JDR, but I do have still in my back office, Zach Hewells. Zach is behind the scenes making things happen, so I will announce our sponsor for today's program, and it's none other than NAIFA itself. Right around the corner is NLC, National Leadership Conference, where we actually sit down and talk about how to become a better leader within the organization, within the industry, and also within your community. So don't miss out on the 2025 NAIFA Leadership Conference happening in Arlington, Virginia, October 14th. And stay around for the Belong Awards and the awards and watch as your favorite people get sworn in and actually take their seat into the next role of NAIFA for 2026. Don't miss your opportunity to be a leader and show up at the National Leadership Conference. With that being said, I have the pleasure of introducing one of our, I wouldn't say regulars, but at least someone we've had on the podcast before. You might see him on TV. I don't know if he's done a TED Talk podcast. He's all over the place. You see him here and there. If you follow him on Instagram or social media, Jamie Hopkins, we're happy to have you. Jamie served for a period of time as a NAIFA consultant and on our board for a period of time. And Jamie now has transitioned into a different role. So we look forward to hearing from him, some of the things that he's doing, but an author and subject matter expert and also a writer of content and also education. So those who don't know, Jamie helped with the RICP designation through the American College and helped coordinate that and put that on. So Jamie, with no further ado, welcome to Advisor Today, the podcast. Good to see you, bud.
Good to see you too, Chris. Yeah, as a JDR, we'll miss him today. Last time I was with him, actually, we got some barbecue. So no barbecue here with us today, but thanks for having me on. You said regular, but then I was trying to think of a witty thing. So I was like, regular, but not ordinary. So we'll go with that.
Regular, but not ordinary. I like it. So Jamie, so tell us what's been going on in your world that I've noticed that social media a little bit, is that, there's been some kind of changes career-wise, and but I still see you giving advice and talking about just topics that are on top of mind for people as the economy continues to evolve and change. So share with us a little bit about your journey and kind of where you are now and kind of what's going on in your space.
I love this industry, and I think I'll always try to give back, give advice, and be part of it forever. And yes, a couple things changed with me over the last 2 years. I stepped out of my previous firm and came over to Bryn Trust in WSFS almost 2 years ago now, and came in here to lead up our private wealth and trust teams, and it's been a lot of fun. And the trust side, we get to work with NAIFA members often is. We do a lot of the delegated and directed trusts, so where we act as a corporate trustee and somebody's managing an ILID, a legacy trust, and then look for us to be that trustee partner. So that's been really fun. As you kind of look out there in the world today, I think the growth of high net worth individuals has been pretty pronounced out there. I do think we have a little bit of that tale of two cities going on, where we have a good portion of America that is struggling with inflation and struggling with keeping cost of living adjustments up on their income. And then we've got another side of, we have a tremendous amount of wealth and growth of firms here in the United States. And, what we try to do is serve both of those ends. But on the trust side, it really comes in on that more high net worth individual world. So that's been a lot of fun. It's a wonderful team. Bryn Trust has been around for about 123 years, and WSFS is, I think, turning 194 years old here, coming up soon. So the city of Wilmington in Delaware, right, the first state, we actually predate the city of Wilmington, which is pretty wild. That's my fun fact about the organization. So a long time of doing this type of trust work. Family's been good. I made this change a bit to get off the road, although I travel a little bit, but way down from where, I used to be a constant road warrior out there with you, seeing you everywhere. But I will see you here coming up soon. So I know we're going to cross paths in this next month. But yeah, then I sit there at FinServ Foundation. We're up to about 42 colleges and universities that we work with. And we just passed our 700th fellowship granted out there to college students entering this industry. So that was, really, really exciting. I actually sent the last email to that one that tipped us over 700 while we were sitting on the Zoom before we got going. So that is breaking news here. And then Bonnie Treichel, who's another industry leader, and I just finished up a new book called Your Retirement Sketchbook. It is out there on pre-order now. So if you feel like getting one, and then hopefully I'll pass all of you at a conference at some point at a NAIFA event and get that signed for you too. But that's a little bit of what's been going on, Chris. Obviously, there's a lot of things going on in the world, but those are kind of the good career and NAIFA and industry-oriented things that are going on in my life.
So, Jamie, people are always interested in your perspective. So I want to ask some common topics that I think may be on other people's minds. And we just like to hear kind of your insight, your thoughts, even though, again, these are opinions. These are not necessarily financial advice. This is just opinions. These are thoughts. These are Jamie Hopkins' perspective. But I think you have an opportunity. You typically present in a little different lens for people, and you have credibility, right? And so the first topic I want to approach is inflation. Okay, is that fair? Is that an okay
Yeah,
topic?
we can talk about
We
inflation.
see, so let's talk about what we see and what's real and what's not, right? And so we see that inflation's super high. And we see that there's pressure on the Fed chair to make some adjustments, make some changes, even prior to where he may feel comfortable of doing so, whether good, bad, or indifferent, right? So share with us a little bit about what are your thoughts around inflation, what's happening, and what could happen as we move towards the future if we keep reducing potential interest rates, however, it's not warranted or whatever it may be. Yeah.
Yeah, one thing I've always said about inflation is not a 1 year problem, it's a 30-year problem. So while we do feel inflation in short term, right? Prices go up, you see them, you get stressed out, you might have less disposable income. In the near term, really, it's the long-term implications I always worry more about with inflation. One of the reasons is when you think about inflation, the kind of watching the monthly numbers is important because the Fed's always trying to get ahead or slightly behind, right? Trying to be fast followers on what the data is telling them. The reality of inflation is that I see people saying, "Hey, when are prices going to come back down?" Prices aren't coming back down, right? Like that's not a story with inflation. Even if inflation gets to a very modest 2% a year type of inflation run, that permanent cost of inflation that has occurred the last 2.5 years is still there. So now we just have elevated prices rising at maybe a slower rate than they were a year and a half ago, but we're unlikely to see this deflationary aspect in any broad measures. You might get certain areas where like milk can spike and come back down, eggs can spike and come back down. Gas does fluctuate based off of oil and demand up and down. But like long term, these things are still moving up and to the right unless there are massive government subsidies that are kind of offsetting that cost of the goods from a long term perspective. But generally speaking, right, we're going to continue to see things go up, not really come back down. So where are we today? Look, I think all of us agree that the last couple of years we had high inflation. There's not a lot of argument about that. Where inflation is sitting at the end of 2025 is a little bit debatable. I would actually argue, I think inflation is actually not that bad right now. With the caveat that stuff's expensive and discretionary income has been shrunk down because things grew faster than people's income were. So it's tighter for a lot of Americans. Now, that's a reality that is different than is inflation out of control? No, But I do think people's ability to maintain their livelihoods is being really, really challenged right now. And that's the thing that I'm more worried about than exactly is inflation 2.4, 2.6. That's in a safe range. I mean, historically in the US, we've been over 3 for like 100-year time period. So in under 3 to me is a managed inflationary world. But it's challenging when you felt that run up in the last couple of years and income didn't keep up with it. And all of a sudden you're seeing, home prices still very elevated, very hard for a lot of Americans to buy homes, maintain their homes, buy food. I think that's a very scary proposition. Now, where the Fed is landing is they've been saying for a couple of years they've got a dual mandate, right? They've got jobs and they've got inflation. They want to get inflation down to 2 and keep jobs in a healthy spot. I'd say the bigger concern lately was that jobs have not looked as healthy as we thought they were going to be, especially that revision where we lost almost 1 million jobs, lost in the sense of the data, right? The revisionary backlook said, hey, there was probably about 1 million that did not occur. I think that's a scary proposition. Also, when we're facing this AI and robotics boom out there that is expected to replace some jobs. And so we've got this momentum coming out of a technology advancement displacing potential workers, still overall in a healthy, I'd say, unemployment rate, but getting worse and inflation may be ticking up. And then you've got this concern out there, and I'd say Americans are concerned about this in mass, although it's not everybody, but what's the impact of tariffs if these really hit full on? Right. We're still waiting on China to kind of see, and that'll probably ebb and flow for a while. But where does that impact really land? That's going to be a driver because if all the tariffs end up pulling through, at least for a short term period, it will be inflationary. I don't think there's much argument about that. The argument's typically over a long term, is it inflationary or not? But short term, tariffs will drive some inflation and prices up. I mean, we've already seen it pull through. People are feeling it today. They're noticing it. And that could still get worse here over the next couple months.
Jamie, I've noticed there are clients that were high-end clients, and they're now looking for jobs, right? That they figured that my job would be here. I've also realized that there were people during COVID that mismanaged the flexibility and the fluidity of money, right? And so it was the belt was looser and people were able to make more decisions. There were more bonuses being paid out. There were companies getting underwritten by forgivable loans, and it was more fluid capital wise. And so the fluidity is tight, and so people are having to make different decisions. So I ask you, just in your observation, with home prices being where they are, which are high, no inventory, which is interesting in the city of Chicago. Interesting enough, I work with a realtor. They said that in the city of Chicago, in last month, there was only 800 sales in the city of Chicago, which is like unheard. Like it's just unheard of in the city of Chicago, right? Okay, so that tells me that if there's no inventory, home prices are still high, people's income is the same, but everything outside of the mortgage costs more. Are we sitting in a situation where we potentially could see another influx of homes being short sold and foreclosed? I mean, right now, you think about it. It's when was the last time you heard of a short sale? Right?
Yeah.
It doesn't. Right now, it's not a thing, right? And
No,
so
they're not really out there right now. So one of the things is not really. I mean, that's a really interesting thing is that when you look at most of the data, what happened is people locked themselves into those low interest mortgage rates, and then housing prices surged. And we actually have a lot of those people. What you're seeing is they don't feel like they can move. We're kind of, there's a little bit of joking going around that it's this like 30-year golden handcuff because you got inflation higher than your mortgage rates now. And all of a sudden you look at that and you say, well, like, why would I ever sell this thing then, right? Like I've got a better instrument here from a lending perspective than I probably should have in today's environment, right? Like you can go get a 4% CD or something today and you're borrowing at 2.75. Well, that's great. Like I should do that every day, all day. You're right. If I had an infinite amount of money, you just lock in as much of that as possible. And so that's a little bit of what's going on out there. There are not a lot of people who have bought or refinanced at the higher rates in the total macro market. So you still have most people operating off of a lower home value with a lower mortgage with really low interest rates. Kind of what's happened before when we've had this is people buy into it at high rates, at high prices. So if we started seeing today, Chris, that all of a sudden it went from a couple hundred to 10,000 people buying homes with high rates at high prices, I think that could lead us to there. But I actually think what's happening is people don't see the economic trade-off today, that they have a good mortgage, probably a decent home that's gone up in value. And then when they look around to go buy a similar house, it might be doubling their mortgage payment to go into a similar house today with more cash up front. And I just don't think that proposition is interesting to a lot of people. And to me, that's what's going to hamstring this supply. And you also look at builders. Here's another issue. And this isn't builders' fault, but like people aren't building affordable small homes anymore, right? Like that has been a prolonged issue. You probably drive around right outside of Chicago. Nothing's a starter home. Nothing's 3 bedroom, 1 bath, right? It's all like 7 bedrooms, 16 bathrooms. And you're like, wow, why so many? Like our families are the smallest they've ever been. And the house has got to be larger than they've ever been. Like, and I kind of look at that and I'm like, like starter homes back in like the 60s, 70s, and 80s. I mean, they barely fit the households then. And today, we have 1 or 2 kids on average, and the houses have 5 bedrooms. And there is some misalignment there that is going on. And but I do think that is holding us back from having more of this supply come in. But that's just the economics of where real estate is today, too. It's expensive, so people are building bigger, nicer houses on expensive real estate.
But Jamie, on the same topic, goods cost more, right?
Mm-hmm.
And so I know some builders that are building, and they're saying, like, we estimated that we were going to be able to build this house for $1.1 million, $1.2 million, and they're coming in now with, especially with the tariffs and a lot of the material coming from outside, they're coming in closer. They're saying like 30, sometimes 40, 50% over by the
Yeah.
time the project is done. So what should someone do if they're in the process of building right now? Because it's a checkbook with endless endless question marks right now. So what do they do?
Yeah, at work. So here at WSFS, we lend a lot to that middle market, construction, real estate. And what I mostly hear today is people are going to finish up the current projects that they're working on, right? They're going to finish their builds, they're going to finish their neighborhoods. But the question mark is remaining about what's the next project. And so that's really what we're hearing from like an economic standpoint is it feels like the current projects are all going to wrap up. And you do remember those time periods too of driving around, right, in the late 2000s, early 2010s with just stalled out neighborhoods that never got finished, right? They got framed up and they just abandoned them and walked away. I don't expect to see that right now. It feels like these are going to get done. Profitability might get pinched a little bit right on the back end here. But I do think they're going to get done. The question is there enough kind of juice, for lack of a better word, in the next project? Is there enough margin there for some of these places to move forward with them? And I think that's really undetermined. Early next year, we could really see a slowdown in activity around that. Again, I keep putting that hedge on the tariff market is very, very fluid, as we know, right? It's a daily fluid conversation with multiple countries and agreements right now. And as that plays itself out, if it gets better and lighter and more certain by the end of the year, I think it'll open up some of those commercial builders to say, hey, we're going to continue forward with the next project.
But Jamie, what happens to the commercial buildings that exist that are still 60% empty? Right? I mean,
Yeah, I think that is starting to turn a little bit, although it is location wise. I mean, you're seeing some large firms say, get back in, right? Like, I mean, that is happening. And part of it, I think, is being done. People made big investments. into these places years ago. They want to see a return on that. They want people back in the office. It's not occurring in every spot, but we are kind of seeing that monthly trickle back in still into the office. I think it's the ones that are a little bit more concerning from what I've gathered is it's actually not so much the city proper ones. It is we really moved to those suburban commercial spaces for a bit of time, and those seem to be struggling to get people back in because they don't necessarily have the same like community stuff to do. So if you look at the cities, their occupancies are starting to trick up, although things are still going into receivership and default in some cities, but it doesn't look as scary there. I think some of those other builds, the spaces maybe don't fit the world anymore. The multi-tenants can be a little bit of a challenge. So people are looking, for changes there, I'd say, on both sides of the house. And, that is something we have to see over the next couple of years. The one good thing, I went to an economic presentation around this, though, is one of the things that is holding a lot of those from seeing a lot of foreclosures and receiverships, again, goes back to the fact they were able to lock in pretty low rates for most of those builds, right? So you think a lot of those builds that got done in 2008, 9, and then people didn't go in. The good news is they had really low rates. If you were looking at that today in those builds, we'd be in a much worse spot because, again, those payments would essentially be double if they weren't getting filled. So that's helped some people manage those. And then you're seeing that conversion, I think, in that space to more mixed residential. So what you're driving around, you're seeing, right, people convert some of those commercial ones to apartments, restaurants below. And so there's a little bit of a shift going on, I think, in how those might be repurposed if the office doesn't fully return.
Well, let's shift gears. Estate planning. The big beautiful bill passed. Good, bad, or ugly. Is there any comments, any thoughts around that of like, okay, here's kind of some things that were really good in it, and here were some
Yeah.
things that not so good. And how does that affect our estate planning? Because obviously we understand that the limits are still there and they've been extended. So if I have an estate of a certain size, I'm fortunate enough that it did not go back to where it was.
Yeah.
But talk to us a little bit about a couple of those topics. So let's start with the big beautiful bill. Any comments on it?
Yeah, so a couple comments as it relates to the estate planning, which is really the big beautiful bill is much ado about nothing as it really relates to estate planning. The really big things we were thinking about, I mean, there were proposals getting there towards the end of totally eliminating the estate tax. Didn't pull through, right? You had other provisions of bringing it back down to a much more meaningful tax level. And that's really the reason that you might see that, even though I'd say the Republican leadership group is not a big fan of the estate tax. It does kind of, from a economic accounting perspective, really help fund things in a bill. So like eliminating it's really hard because where do you come up with the revenue? And that becomes the challenge in the bill. So you saw it extended out a little bit, to your point, broadened a little bit. But I think number of people impacted by that is a relatively small group because we were already talking about a very large lifetime exemption amount and a state exemption amount being expanded up a little bit. Total number of people, not a huge impact. I've made this argument for a long time, and it's fairly unpopular. So if I became a politician and ran on it, I have to come up with a different way to propose this. But I'm a big fan of the estate tax, always have been, for two reasons. One, I've always asked myself, if I was going to pay taxes in my life, when would I rather pay them? Would I rather pay them now, today, or would I rather push them off and my estate pay them? In short, I would rather pay every tax I'd ever owe in life at my estate at my death, and none during my life. So that would be my choice. And like, could you do that? It'd be almost impossible to move the current system to that. But yes, of course you could, right? You'd either spend the money or gift it, which would be taxable in the same situation, or pay it at your death. And actually, if I think most people, if you really understood that concept, would agree that I would rather pay my taxes at death right? I'm not in ancient Egypt. I'm not bringing my money with me in the afterlife. Like it's gone. So what that I pay taxes at the end of my life? So I'm actually kind of a fan of generating some of our revenue at death instead of having to pay income taxes every year. It seems like a lot of wasted energy and efficiency. The other thing is, I'm a big fan of the estate tax because when the estate tax was lower, guess what people did more of, Chris? Guess what they did? Right? Or the
They
exemption
bought more
was lower.
life insurance.
We bought more, we actually bought more life insurance and we did more estate planning. As
Yeah.
the exemption amount has moved up, we've seen less planning, less gifting, right? And less life insurance. And it's directly tied to that because most Americans now look at that and say, I will never owe estate taxes. I don't need liquidity. I don't need to do planning. But when that tax impacts more people, we get more planning. So, from my perspective, the tax serves as a functional, hey, go get your work in order. So, I actually don't like seeing it push back. Now, look, the other argument is less, do you like an estate tax at all? People shouldn't pay stuff at their death. Different argument. But when I look at it from a behavioral standpoint, I see the value in it. So, I'm generally not a fan of moving it back. Total impact on this from like a dollar is not real significant, but that's the big one that really kind of came through from a state perspective that I've been talking about. So what does that mean? It means the onus to get Americans to think about estate planning is still on us. It's on the advisors, it's on the insurance agents, it's on financial service professionals. We are the ones that have to have that conversation. And while it's never named that way in the bill, they should write that in there, right? Since our state tax exemption is so large, advisors, you need to go do your job and make sure people know that estate planning is important. That's basically what the bill is telling us, right? The onus is not on the individual because of the tax, it's on us. So I think that's really important for us to understand that what we do is a noble profession and making sure that people's heirs and kids and grandkids and kids with special needs are taken care of is super important.
Yeah, it's funny. You lower the exemption, people do more planning. You raise the exemption, people do less planning. It's kind of backwards. It's like kind of an oxymoron, right? What are people doing? So what's new? So I know that you've written, is this your third book?
Yeah, in a way, we'll go with third. I technically have 8 books, but some of those are textbooks. So when you're going through American college courses back in the day, to picking
Yeah.
up one of those lovely textbooks. But yeah, I had Rewirement, 2 editions of that, Find Your Freedom, and then Your Retirement Sketchbook with Bonnie Trickle is coming out with Harriman House here pretty soon.
Okay. So talk to us a little bit about the new book that's coming out. What can people look forward to? Is it a, it sounds like it's a way for people to engage into a process where, when you say the word workbook, right? It reminds me of going back to first grade where
Yeah.
you learn something and then you have to have your workbook where you have to actually do it yourself. And then it keeps you on track because it's got like a little checklist of things you
Yeah.
do along the way. So I could be wrong, but tell us a little bit more about the book.
Yeah.
And for our NAIFA members out there who are Jamie Hopkins followers and that believe in what you say and actually some of the things that the way you present, where can they get this book?
Yeah, so the book's hopefully going to really resonate with people. So it is different than anything I've worked on before. And a lot of people see my funny little, videos where I write on the white paper. It actually got inspired by that. So the book is really following the whole continuum of saving for retirement, retiring, retirement income planning, spending in retirement, and then what happens at death. So we do this whole kind of story arc of retirement in the book. And so it follows those phases of, saving, preparing, going into retirement, spending down, and then passing away. And it's 125 different retirement planning topics, which is really cool. Then every topic is about that topic. So Medicaid spend down, I'll just use that one. It's right on the top of my head. So we kind of describe what it is, some facts around it, a reflection question to your point. And then with the sketchbook part, though, that's really cool is we actually did a drawing for every single one. So you think of like sketch art where somebody is talking and they draw the little sketch of it. So every page is an explanation, reflection question, advice on the topic. and then a sketch page of visually drawing out what that concept really means to you. So many people are visual learners. And so our goal was, hey, let's tie this retirement planning concept to something that people can more easily and hopefully more fun, kind of interact with. And then to your point, we have these blank pages where people can do the reflection questions and actually draw some of the concepts for themselves. Like, how do you turn this concept of Medicaid spend down into a picture? There was an individual years ago that told me, right, anything that you can explain, you can put into a picture. And I thought that was such a cool idea. So I said, let's do that. So we did that for 125 different retirement plan topics, including things like life insurance, ILITs, reverse mortgages, all these fun topics that we talk about all the time, but let's show them. Because I feel like for us, the only thing I ever see is like bucketing, right? You just see those three buckets pouring one to another. It's like our number one visual in this industry. So I was like, let's make a whole bunch of these. And yeah, that's the book. Easiest place is always Amazon, although, it's at Target and Walmart and Barnes and Nobles for pre-order. But I think everybody just goes on Amazon and your retirement sketchbook, and you can pre-order it today.
So, Jamie, will it be a tool that people like simplistic people like myself can say, okay, here's how they explained it. Maybe this is a way I can explain it again in a different situation? Or is it something where I'll learn it myself, but I can't articulate it to a potential client?
No, we are hoping that this becomes like an advisor tool that advisors will use, hand out, give the clients. We're actually approaching some retirement plan providers too about this being an education piece out to all the participants. While we haven't finalized this portion yet, we will do it. We're just not sure we're going to do 125 of them, but we actually plan on doing flashcards with each topic. So taking the drawing and making it the backside. I don't think we'll do a whole 125. We're probably going to get it down to about 50, but we think that'll be a really like kind of fun activity to have that goes along with this.
Nice. That sounds pretty cool. So Jamie, what's next for you? I know that kind of the role. Let me rewind the tape. The role you're in currently with this trust company. Describe to our NAIFA listeners, like, what role is it? Is it business development? Is it corporate relationships? Is it education? Give us kind of an idea so when people see you, they're not approaching you saying, hey, Jamie, listen, I was thinking about this fund or this fund. What do you think I should do? Just, yeah.
Yeah. I get asked a little everything, Chris, and I love that part. So my job is, right, I'm CEO of the wealth business here and chief wealth officer at the holding company. So I oversee 7 different wealth business lines. And, so that's a little bit of everything. I spend regulatory, business strategy, a lot of time with who our partner companies are going to be, right? From tech providers to other wealth firms, spending time with them. Because I came out of that side, I had somebody when I was, we brought them on as, we're servicing as their corporate trustee for all their trusts. And I remember the end of the conversation, the guy's like, hey, he didn't know me. And he was like, man, it really feels like you know what it's like to be an advisor. It's so refreshing to talk to a trust company. I was like, well, I still am a registered advisor and do a little bit of that too. And he was kind of like blown away that we had that mindset. And I think that's been a really wonderful part of being here is, my experience with clients and sitting in those seats and then sitting, kind of at the strategy level that we're designing things here with that end client in mind. Like I always lead with that in our meetings, right? Is what's the best interest of the client? What's that client experience? Even if it's not our client, right, directly, like really our clients often are advisory firms or wealth firms or family offices and or other businesses around the area. But their end client experience is a reflection on us ultimately. So we have to think about things when we deliver product, services, technology, even communications out. What is the impact on that end client? So, I love this business, going to continue to try to grow this business and lead it into the future. And then, be part of the industry. I think that's an important thing for me is being this industry advocate and helping whether it's education, whether it's nonprofit work, whether it's work with the trade associations, that's really important to me because I really do believe that the rising tide lifts all ships. And the more of us that are doing better work out there, the better off everyone is, because that drives the trust in this industry from Americans across the board.
Well, I mean, and Jamie, give us some insight. I mean, the industry's changing, right? And I've been on the, out there on podcasts saying, I don't believe AI replaces us. I do believe that it can help us be more efficient and effective at what we do, because at the end of the day, when we show up to the funeral, imagine a bunch of robots showing up at a funeral saying we're here to deliver checks. That just doesn't make sense. But when it comes time to make really hardcore decisions that have to deal with the heart, the intelligence can't do that, right? The intelligence can't come into the home and make dinner and have you sit at the kitchen table and you talk about nostalgic things. I mean, so those are things that will never go away, because this is a relationship business, right? And so the data free and clear, sure. I mean, it can make a lot of us, I believe, in our businesses more streamlined and more effective and efficient. I'll give you an example. I was talking to a client the other day and he goes, Chris, I want to lean into AI. He goes, I want some of our investments to have a heavy AI influence. And so I've got a couple research guys, but I just popped it while we're on the phone. I was like, let me go to chat and let me pull up the top 5 innovative AI funds out there, or investment opportunities for clients to participate in, right? And how much time would that have taken, my young guy to come up with an analysis of it all, right? However, it did not tell me, like, well, if I'm building a portfolio and the assets are underwater, like, how do I recapture some of that? Like, so there's our capabilities that come from experience, right?
Mm-hmm.
Even understanding that inflation is changing, and that because of just the economy and because of the dynamics of the politics today, that it can swing one way or the other, and us being aware of and being human and understanding, okay, let me watch this a little bit. Let me see what happens, right? It's not as driven by AI, but it's about, we get a feel for it. And that's something that AI can't do. And maybe I'm wrong. It just hasn't evolved to that yet. But I do think people that are not in this industry coming into this industry, it's a great opportunity. And people that are in this industry that are running scared from it, I think they need to embrace it. And the people that are on their way out, I think they need to integrate it into their practice so they can sell their practice at a multiple versus a flat rate. So what are your thoughts on just the future of our industry and AI?
I think our industry for the next decade, 15 years, is going to be one of the best stretches and runs to be in this industry. So I am, really excited about that. I think we're going to, I think people's money problems are more complicated than they've ever been in the history of the world. And I think that suits this industry to come in there and marry that human element of it, emotions, behavioral finance, and investing together better than we've ever done it. I do think the technologies that are coming out there are allowing us to offer a better, broader service than ever before. What I will say is it's hard to bet against technology in the long run, but I think we're vastly overemphasizing the impact that AI is having on the short run. I was on a panel, I think a year and a half ago, and everybody on that panel said, hey, what's the single biggest thing that's going to impact the industry over the next year? Everyone said AI. And I said, that's nonsense. Like, AI is not going to disrupt our industry that much for the next year. It has not, right? That's been a year and a half. And to be honest, like, the best thing that people are doing is taking notes with AI. Like, I mean, like, that's not disruption. Like, that's an intern. It's just going to be honest, right? Interns were doing that work, right? There are actually some really cool interns of note-taking interns out there. Like, that's not disruption, right? That's a little bit of efficiency on the sides of an advisor. That's great. But that has not disrupted anything. I really today say I haven't seen any AI disruption in our industry. I don't think any advisor is losing their business to somebody down the street because of AI yet. Now, long term, do I think that's going to change? Absolutely. But I still don't think that's in the next 2 years. I still think that's maybe 3 to 5 years out. When I talk to most firms, they're dabbling in AI. They have some, what some of those AI bots internally that's helping searching be better, drafting a little bit. All those things are little, like, slight efficiency gains at this point. The problem with AI, there was an Apple report in 2025 around this, which said that AI is really good at single issue tasks. So go tell me the top, performing AI companies from an investment standpoint. It can do that. If you then ask it though, like go find those, put them in a portfolio, and create tax efficiency out of it. What happens on three-layer complicated tasks is they actually go to an accuracy rating of 0. So Apple tested this across all of the mass models out there, and not a single one got anything right because they're guessing, and that's how those systems are created. So they're making an educated guess. But when you compound educated guesses 3 times, guess what you get? Complete garbage, right? That's like when I tell my kids one fact and then they extrapolate it twice, and all of a sudden, like, right, I say unicorns aren't real, and they're like, unicorns aren't real, but dragons are real. I saw a dragon yesterday. And like, that's how we got there, right? Like, is somehow okay, like we're really far off here. That probably isn't a perfect example, but you get it. Like you have kids, when you tell kids one fact and then all of a sudden the same sentence, like you're totally far away from this thing. And that's really what's kind of occurring to AI today. But that's going to get better and better. The future, I don't even know that we can imagine what it's going to be yet. I do think it'll be disruptive, but today, and I think for the next 2 years, it's about pulling other services into your firm. That is the main thing I'm seeing. Clients are saying we want a one-stop shop. We want to be able to do our banking, our investments, our planning, our insurance, our estate with you. So we saw tax services pop up the last 3 years. More and more firms are using places like a Holista Plan than ever before. You're seeing the growth of all the estate planning services, from trust and will advertising at on NFL games and in apps, to wealth.com, to Vanilla, to all these places coming in. And that is what to me is being demand driven from the end client. We just haven't been able to deliver a coordinated experience well yet in this industry. But if we can do that over the next 2 years, if you look at the firms that are growing, they have more services than the firms that aren't growing as fast. That is one really big thing you can point at. And I say, well, they have more. Like, they just have more. It might not be a lot more expensive, but they're delivering more at the same cost structure and they're growing faster.
So, Jamie, really quickly, I found the book. It's called Your Retirement Sketchbook, Retirement Planning Lessons for Financial Experts by you and Bonnie Trickle. Is that correct?
That's us. Yeah.
It's you guys. Yes, it is out. So it says Retirement Sketchbook 125. What does that 125 stand for?
Well, that's the 125 different topics. I don't know how it's populating right now, but that's the 125 different. So it probably says behind it. That's kind of the subheader, right? It's usually have your book and then that one that's in small print underneath that you never bring up again.
Okay. And Jamie, where can people find you now? I know you're online in places you can look up.
Yeah.
I can find you, but where else? I know you're going to be out in California at E3 presenting, or E4, E3, E4, E4,
E3. Yeah, I'll be at E3 and I'll be out at Schwab Impact and FPA National. I'm speaking at those here later this year. I really haven't thought much about 2026 where I'll be yet, but I'm sure I'll be hitting the circuit a little bit with the book probably early next year too.
Well, Jamie, it's always good to see you. Do you have any other final words? I mean, I could have like 7 topics, but
No, I think it's a good time to wrap up. I think one of the things we landed on here though is Americans are stressed. Your clients are stressed. Stay in front of them, keep communicating. Our job is to help them with peace of mind and their financial security, right? It's a noble profession, which I mentioned before, but there's never been a better time in the history of our industry to be in this industry, right? Finances are more complicated than ever, right? We have more people with money in our country than ever before. There's more wealth than ever before. The tax laws and estate laws and services are changing more rapidly than ever before, with tariffs changing daily, right? We can provide so much value. So to get in front of people, help them with this, get them real planning done with all the services, like that is such an amazing place to be right now. So with all like the chaos that might be going on out there, I think have that pride in what you're doing and what we deliver as an industry is really, really wonderful.
Well, Jamie Hopkins, you never disappoint. brother. We're always happy that you're part of the NAIFA family. So those of you that are listening out there, go check out Jamie's book, your retirement sketchbook, Retirement Planning Lessons for Financial Experts by Jamie Hopkins and Bonnie Trickle. You can find that. And as we close the podcast today, Jamie, nothing else? You sure?
That's good for today. Yeah, stay safe and healthy. We had a good close there.
All right. So Jamie, congratulations on the book that's coming out. As NAIFA members, go get it. Let's support our fellow NAIFA member, Jamie Hopkins. And for anyone feeling overwhelmed by financial needs, shoulds, or maybes, this book is a roadmap that reflects and sketches out an actual plan, instead of just dreaming about one. So thanks for joining us today, Jamie, and sharing your heart in helping people engage in their own terms. And to our listeners, go out there and grab the sketchbook to support Jamie. Listen, this is Chris Gandy. Thanks for listening to NAIFA Advisor Day podcast, where belonging, believing, and leading isn't just a mindset, it's a plan, just like in the sketchbook. Until next time, stay curious, stay courageous, and keep building towards the life you deserve. We'll see you soon. Thanks.
Thanks for joining us for NAIFA's Advisor Today podcast series. Make sure to subscribe to get future episodes. And if you're interested in coming on the show, let us know.